Welcome to the Accountancy Learning AAT sample paper walkthroughs. This walkthrough will be for the Level 3 Financial Accounting Sample Paper 2 Task 2, which is all about recording period end adjustments. Let's look at the first task. AJ is processing prepayments for a client. His manager tells him there is not time to finish this work and therefore no adjustments should be made for the prepayments. We're asked to identify which one of the following is a potential consequence of complying with the manager's request. And we've got 5 options there. So the top option, the accounts will give a true and fair view of the state of the organisation. Well, this isn't going to be correct because the adjustment hasn't been made, so therefore the accounts are not correct. The rest of the options that we've got there are all about whether profit is going to be understated and the effect on assets and liabilities. So when we think about it, if we haven't put any prepayments through, then it means that we have put the cost of something through that may be for the future financial accounting period. So therefore, it's going to have come out of our profit. So therefore, our profit is going to be understated because we should have really put some of those costs in the future period. So it's got to be either the second or the third one, because profit has to be understated. Now, with the prepayments is then going to be an asset in our financial position. So again, they are going to be understated. So therefore, it could then lead to incorrect decisions being made. So our answer then is the third one. AJ is now working on the accounts of Bethan, a sole trader. A financial year end is the 30th of June 20x8. Complete the following statements. So any adjustments for prepaid expenses that are made should be dated. So if we're making adjustments at the year end, it's going to be our year end date. So it'll be the 30th of June x8. Then the reversal of the adjustments for those prepaid expenses will then go through in the next financial year, which would be the 1st of July x8. So the adjustments happen on the year end date and they get reversed at the start of the financial year. AJ received an email from another client which included the following concerning their customer, JS Limited. The invoice we sent to JS Limited is due to be received at the start of the next financial year, but I have been advised the client is in financial difficulty and might not be able to pay. We now need to identify that the action AJ should take. So the client may not be able to pay their invoice. So do we do nothing until next year? Well, no, we need to make sure that we're recognising something in this year because we are aware of something. Set up a specific allowance for doubtful receivables, or do we write off the debt as irrecoverable? So we don't know that it's definitely irrecoverable. It's just that they're in financial difficulty and they might not be able to pay. So therefore, we are going to say we're going to set up a specific allowance for doubtful receivables. So that specific invoice will go down as doubtful in the accounts. AJ is now working on the accounts of Angela Deering, a sole trader, for the year ending the 30th of June x8, and the business isn't registered for VAT. In the previous financial year, an adjustment of £800 was made in the administration expenses account for accrued expenses, but it has not yet been reversed. Cash book entries for the year ending the 20x8 relating to administration expenses were 35,750, and the cash book entries included an amount of 2625 which related to the following financial year. Part B asks us to complete the administrative expenses account for the year end, and we need to make sure that the account is balanced off appropriately and enter our answers to 2 decimal places. So first of all, let's deal with the accrual that went through at the end of the previous year, because that hasn't yet been reversed. So because we put it through last year, it means it would have been a debit in our expenses to increase our expenses. So we are going to do our accrued expenses reversal on the credit side. And that was 800. And remember, we're to 2 decimal places. Now we're told details about the cash book. So this is the money that we've paid out for these expenses. So it's going to increase our expense by £35,750, and we'll go to two decimal places again. Now we need to deal with the 2,625. So that's been prepaid to the next financial year. So we're going to be crediting our administration expenses because they don't belong in this year. And that will then reduce the balance. And now we need to ensure that it's balanced off appropriately. Now, because we're at the year end and we're dealing with an expenses account, we need to transfer that to the statement of profit or loss. So we would want both sides to be totaling 35,750. So our balancing figure is on the credit side, which is £32,325. AJ is now working on the accounts for Viv, a sole trader who runs a sweet shop. Alongside the sweets, she sells hand-decorated sweet jars. It's her policy to sell any sweets which she does not consider perfect at 50% of their normal selling price. One of her products is called AR Sweets. They usually sell for £2.50 per packet, and they cost £1.75 per packet. 15 packets were dropped and damaged, so they're not going to be perfect. The first part is to calculate the total inventory value which should be included in the accounts in relation to the damaged AR sweets. Show your answer to 2 decimal places. So this is where we're going to be looking at the lower of cost or of NRV, net realisable value. So we know that the cost is £1.75. So that's our cost. And then our net realisable value is going to be half of the selling price because it's 50% off. So we would divide that by 2, which gives us £1.25, which is our NRV. So we're always going to be choosing the lower one of the two. So then we times that by 15, which is our number of our damaged sweets, to give us £18.75. So be careful when you're reading these questions, because it does ask for the total inventory value, not per sweet. It is the total of the 15 packets. Then finally, Viv sells hand-decorated sweet jars for £20 each, and they cost £10 each. One jar was damaged and will cost £13 to repair, and then it's going to be offered for sale at a 10% discount on the original selling price. So what we now need to look at again is our cost and our NRV. So we know what the cost is, but we now need to calculate what our NRV is. So we know there's going to be a discount of 10%. So it would be £20, and we're going to take 90% of that is going to be what it would then be sold for. But we need to take off the amount that it would cost to repair. So we'll then take off the £13, which gives us a £5 NRV, and the cost was £10. So therefore, it would be £5 for the inventory value for the damaged jar. And that concludes task 2.